Welcome to the weekly trading signals. I'd like to start the session by giving you some information about me. My name is Ihab Jubil. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities, and in recent years, I have also set up my own trading robots, signals, and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Now, let's start the session. There will be a number of tradable economic news that we will be looking at this week. On Wednesday, 27, at 2:30 a.m. Australian quarterly CPI. At 9:30 a.m. the same day, UK quarterly GDP. At 7 p.m. US interest rate. At 10 p.m. New Zealand interest rate. On Thursday at 1:30 p.m. US quarterly GDP. On Friday 29 of April at 1:30 p.m. Canada GDP monthly release. Now with the first event we will be looking at this week. Australian CPI will be released on April 27 at 2:30 a.m. London time. The Australian CPI figure is quarterly release, therefore there is a chance for surprises. It's forecasted at 0.2%. Previous release was 0.4%. How to trade this news? If we get a better than expected CPI data, we should see an instant appreciation of the Australian dollar by at least 40 pips within first 15 minutes. But if we get a worse than expected number, Australian dollar should drop and we should expect the market to consolidate. Of course, the deviation that I am looking for at least 0.3%. So on a minimum release of 0.5%, I would make rise option on the Australian dollar. After a decent retracement, if we get a minus 0.1% or worse release, I would make full option on the Australian dollar immediately. I will describe more and I will practice with you. We will imagine the trade. But first, you should remember to draw support and resistance levels before the news release. Always do it. Prepare yourself for the trade before the news release by drawing support and resistance levels, as you can see in the chart. Green, resistance, and blue, support levels. If the market breaks these levels, this means you have a better opportunity at winning the trade, any trade. And about the retracement method that we usually use to trade the news, you should wait for the deviation of the actual release. Deviation is the difference between the actual release and forecasted release. So you will wait first to see we get the deviation number or not. The actual release makes surprise more or less than the forecasted number or not, and for how much. And then wait for the market to move with momentum first and wait for a decent retracement before entering the market. If the market doesn't react to the news, like if we get the deviation number, but the market doesn't react to the news by at least 30 pips or 40 pips in some currency pairs, we should not enter the market or make any trade. And if we don't get the deviation number, means the actual release is as expected or around the expected number, expect the market to follow the pre-release market condition and sentiment, and expect the market to move within the resistance and support range. So let's imagine now is the news release. This is today candle. First, we draw the resistance line and support line. And we prepared ourselves by source to get the actual release as soon as possible. We can't see like trend for this market, Australian dollar yen, 1-day chart. So we draw resistance and support levels. And this is today candle, daily chart. If we get 0.5% or higher release, we will see if the market reacts to it by at least 30 pips up within first at least 20 or 30 minutes. It should happen immediately within first 10 minutes or even 5 minutes. So we will see if we get 30 pips at least. Then we will wait for decent retracement within also first 20 minutes up to 30 minutes. Then we will just directly enter the market, regardless these lines. So get 0.5 or higher release, watch the market, and you will see it reached at least 30 pips as a spike move. First reaction of the market to the news, 30 pips at least, and wait for decent retracement. Then we enter the market and make rise option. On the Australian dollar, it should be against weaker currencies at this moment, or just use default pairs, Australian dollar dollar or Australian dollar yen. Sometimes I trade it using pound Australian dollar, but for sure it will be not the same direction. So if we get like 0.5%, pound Australian dollar will be full option. So first scenario is we get 30 pips. The market will move 30 pips or no. If yes, decent retracement, and then enter the market by making rise option. If we reach it, or the actual release is minus 0.1% or less release, we will wait to see 30 pips at least downwards, and then wait for decent retracement within first 30 minutes, and then entering the market regardless support or resistance levels. For sure, in this situation, if it breaks the resistance levels, it will be even higher opportunity for us to get a win trade. If it go down because we get minus 0.1% or less, it's still the market will move in this range, and it's still good opportunity for us to win the trade. So, but what if we get 0.5% or higher, or minus 0.1 or less, and the market did not react? The market did not make the 30 pips or more of like instant reaction after the news release. We will treat it exactly as if we don't get our deviation factor. So the market did not reach 30 pips immediately after the news release. So we will go to the third scenario, exactly like if the market of the actual release is between minus 0.1 and 0.5%. So in this scenario, the market did not hit the surprise factor or deviation factor, or it hit the deviation factor, but the market did not react with good move of 30 pips or more. What we will do is we will just follow the pre-release condition and sentiment. And the market usually respect these lines, the resistance and support levels. So if this happened, we will see the market, we will wait. If it break the resistance levels upwards, we will make rise option. If the market moves downwards, so it means it respects the resistance levels and we will make fall option. So in this situation, we will wait and see the market. If we can see clear trend of the market, if it's a clear uptrend or downtrend, we will simply make a rise option or fall option according to the pre-news market trend, and we go in the same direction. About the duration of your trade or the option, the expiration or expiry of your trade is 4 times the time frame. So if you use 1 hour chart, expiry should be 4 hours because it's 4 times of the chart time frame. If you use 4 hours chart, the expiry should be 16 hours. So when you place trade, you prepare your chart. The time frame here is 1 day. So if you place trade according to this chart, according to the support and resistance lines, you should make expiry as 4 days. So according to the chart you use and how the market react and how the market respond to the release, you place your trade with expiration of 4 times the time frame. UK prelim GTP will be released on April 27 at 9:30 a.m. London time. UK prelim GDP is the most important of 3 GDP releases since it is the most likely to surprise the UK prelim GDP, with the sterling pretty much driven by Brexit polls. A surprise in the pound could definitely change the short-term direction of the market on the pound. It's forecasted at 0.4%. Previous release was at 0.6%. How to trade this news? Since this is the first release of the first quarter GDP for 2016, we are likely to get a huge reaction if we get a surprise number, if our deviation factor is hit. And considering the recent positive trend in the economic data, we may get a strong surprise release on this Wednesday release. However, we will still be looking to trade the release using our after news retracement method. Our surprise or deviation factor is around 0.3%. So we will look to possibly make fall option on the pound at 0.1% or worse, and make rise option at 0.7% or better release. Again, remember to draw support and resistance levels before the news release. If the market breaks these levels, this means you have a better opportunity at winning the trade. This is the pound dollar daily chart. So we'll use the retracement trading method to trade this release. We'll wait for the deviation. We'll see the actual release. We'll deviation if we get it. We will watch the market to move with momentum first and wait for decent retracement within first 30 minutes before entering the market and buying the option or placing your trade. Important, if the market doesn't react to the news by at least 40 pips within first 15 minutes after the news time, we should not enter the market or make any trade. Or you can just watch the market to treat it as if it did not get any surprise number. This is today daily candle of the pound dollar. We can see it starts to break the resistance levels. If this candle close like with big move today, it means there is higher opportunity to trade in this direction upwards. As usual, if we don't get the deviation number, expect the market to follow the pre-release market condition and sentiment and expect the market to move within the resistance and support level. But if we can imagine the news release is just now and the market kept breaking the resistance levels, we will simply place price option on the pound against weaker currencies at this moment. US FOMC interest rate will be released on April 27 at 7 p.m. London time. This news release is the main focus of the week, but with most federal officials and the market in general expecting no action on Wednesday, any deviation from that expectation will cause a huge market correction that could last days or even weeks on the dollar. It's forecasted at 0.5% as previous release. I expect to see no further policy action. Global inflation recovery is still dragging on despite recent gains in crude prices on the back of potential production freezes by OPEC and non-OPEC nations. Therefore, the FOMC is very likely keeping a wait and see stance this meeting, Wednesday meeting. There are some potential scenarios, 3 scenarios. If federals talk about easing or explore the option of negative interest rates, you will see rush to sell the dollar. I would be going long on the euro dollar and short on the dollar yen. And the dollar yen we will make full option. Second scenario, so first scenario is if they talk about easing, for sure the dollar will get weaker. Second scenario is if federals maintain the current policy, we will probably see very little response as this is the current expectation. Third scenario, and in this situation of federals maintain the current policy, will follow the pre-market trend. If federals talk about hiking rates further any soon, we'll probably see dollar strength, but the degree of gains will depend on the tone and the language used in the statement. I would recommend you to wait and to be patient to see the momentum of the market before making any trade. So just be ready, choose the market, make your resistance and support levels, and wait after the news release and the statement and see the reaction of the market, the momentum of the market, and place your trade depending on that. For sure, you will go in the same direction. New Zealand interest rate will be released on April 27 at 10 p.m. London time. Interest rate decision is expected to leave rates unchanged at the current level, 2.25%. With commodity prices recovering, RBNZ is definitely having a bit more room to drag on before having to adjust its monetary policy again. It's forecast at 2.25% as previous release. How to trade this news? Current forecast surveyed by Bloomberg agrees that RBNZ is likely to keep the official rate unchanged at this meeting. However, in the event that Governor Wheeler surprises the market either by hike rates or cut by 0.25%, we should see an immediate strong volatility in the New Zealand dollar, which is a great opportunity to trade New Zealand dollar. So we'll consider making rise option at 2.5% and full option at 2% interest rate as actual release. Remember to draw support and resistance levels before the news release. This is New Zealand dollar daily chart. Let's go on channel. So if it keep going in this channel, we will watch the time at the time of the news. If we get 2.5% as interest rate, if the market reacts to it, and most probably it will react definitely by more than 50 or 60 pips immediately, we will consider making rise option as soon as possible. You don't have to wait for even decent retracement. And if we get 2%, the same, you don't have to wait or to see the levels, just see the market start to react and make full option immediately with expiry of 4 days if you use this daily chart like I use. If we don't get any change, we will see if the market breaks any of these levels at the time of the news release or even at the same day of the news release. You will just follow the same direction. US advanced GDP quarter 1 will be released on April 28 at 1:30 p.m. Because this is the first quarter release for the first quarter of 2016, we are likely to see plenty of market reaction, especially considering Wednesday rate decision. It's forecasted at 0.7%, previous release 1.4%. How to trade this news? We are looking for a deviation between 0.2% to 0.3% from the forecasted number of 0.7%. Therefore, if we get a 0.9% on the first quarter GDP. It would be US dollar positive. We will make rise option on the dollar. However, if we get a 0.5% or worse, then we would be making full option on the dollar. We'll be looking to trade this release based on the retracement trading method as usual. And since this is high impact release, strong market volatility is expected immediately after the release. Don't forget to draw resistance and support line. This is dollar Swiss franc daily chart. If the market doesn't react to this news by at least 40 pips immediately after the release, we should not enter the market or make any trade, or you can also follow the pre-news market condition and sentiment if you see momentum in the market after this release. Last news was us here today is Canadian GDP that will be released on April 29 at 1:30 p.m. on Friday. Canadian GDP is expected to come at minus 0.1% as forecasted release. And considering the recent rise in crude prices, a stronger release will surely support the Canadian dollar more and get even more stronger. The previous release was 0.6%. How to trade this news? Let's look to make full option. If we get minus 0.4% or worse release, or we will make rise option on the Canadian dollar if we get 0.2% or better release. With recent weakness seen in the Canadian dollar, a strong fundamental such as the Canadian GDP figure may be the catalyst. We need to see more volatility in the Canadian dollar in both directions. Here is pound Canadian dollar daily chart. You can use the chart that you want to trade 1 hour, 4 hours. The better that suits you and the better that you see higher opportunity in it, and also where you can draw easily resistance and support lines. We will use the retracement trading method to trade this release. I want to remind you to wait for this deviation. If we get the tradable deviation, 0.2% or more, or minus 0.4 or less, so we will wait to see the market momentum and wait for decent retracement before entering the market and buying the option or placing your trade. If the market doesn't react, if it's pound Canadian dollar, it would be around 60 pips, 50 to 60 pips. If we don't see any instant reaction to this release, we should not enter the market or make any trade. If we don't get the deviation number, we get number between minus 0.4% to 0.2%, expect the market to follow the pre-release market condition and sentiment, and expect the market to move within the resistance and support range. We also will wait to see. This is today candle, pound candle will be short. If it breaks this resistant line, uh, we should consider making rise option at pound Canadian dollar, especially if we get a higher release on Friday. As usual, the duration of your option would be based on your chart time frame. If you use 1 hour time frame, you should make, I recommend you to make expiration of your option to be 4 hours. If it's 15 minutes, it should be 1 hour. 30 minutes means 2 hours, and so on. So then I'd like to thank you for attending today's webinar. We will hold the following webinar next Monday. Goodbye and see you next time.